Hey, what's up guys? Sam here, and I'll be doing the free video for Friday, October 7th, 2022. So we have another week is in the books, and boy oh boy, the volatility is quite high. Gaps up, gaps down, the moves don't stick, and then guess what? We close basically where we started. A little bit better than where we started. So last week in the Friday video with you good folks, I told you that I told you that the market needed to see an intervention over the weekend, and it needed to be either some central bank around the world or the UK government needed to reverse their budget proposal, which caused all kinds of problems over there, although that wasn't the reason. They have much bigger issues in that budget, but that's what the narrative was. Or something in Ukraine had to get better, right? You needed a narrative change over the weekend, primarily driven by some type of central bank intervention. Over the weekend, we got the intervention, right? So we got the UK pulled their budget proposal, right? Which is one of the three things that I told you could happen that would help reverse the market. And then the BOE, Bank of England, expanded their bond buying program. Just a heads up on that, that does end next Friday, although they were very likely to extend it. And of course, nothing happened positive in Ukraine. So we did get the intervention that the market needed, and the market got the pop, right? You know, we closed at the lows and gapped up, and closed at the highs and gapped up again, and did the whole thing. But notice it didn't do anything. All it did was kind of close the gap that was open here, hit the 21 EMA, and then that's it. Just rolled right back over after today's jobs number. So it's a very similar technical position to last Friday's video, but there's a couple of key important differences. So the key important difference is that unlike last weekend, where there was a based on experience, I knew they were going to intervene in some way. This weekend, I don't have that belief. I'm open to be surprised, but I don't think they're going to. I don't think they're going to intervene again. Well, they've already intervened. So the low-hanging fruit of intervention has already been played, and it lasted 2 days. So I don't think that the market's going to see intervention this weekend, which therefore leaves it to its own devices. It's just going to trade off its technicals, and the technicals here are just straight garbage. I mean, I don't have a better way to say it. Yes, I acknowledge you're at the weekly 200. Yes, I acknowledge that is a major point of major support long term, but at the same time, the signals here are just too heavy, right? What you want to see when you're getting into a 200 is you want to see it purged out. You want to see the histogram. If you use nothing else other than just the squeeze histogram, you want to see the squeeze histogram at least have 2 bars, yellow bars, in the counter trend direction. Right? This is just getting started. You see how that looks a lot like this? Right? That's just getting started. So, you can have gigantic moves from this. So this is not good. And it says that even though it's support underneath, it's very unlikely to hold because of the speed and the compression. That's bearish, active sell signals, and unlike back here, you have no turn. You have no hook here. Right? So the target remains 3,400. That's not really going to change. Pretty much the same. It's kind of the same video as last Friday, except without the kicker, without that positive kicker of the intervention. Now again, I'm open to be surprised this weekend, but I just don't expect it. So without intervention this weekend, there is a decent chance that we could open extremely poorly next Monday. Let me show you a couple more signals here. So the SPX looks like garbage. Yes, it is at support, but it's coming in too hot. It completely undid all the progress of the week and has reset all of its technicals, which is not a good thing. One signal that I was looking at with the folks in the gold room was the VIX. And I was looking at this through the VIX futures with /VX. And you can see here that the VIX futures, mind you, this chart will not trend very well. So don't necessarily pay attention too much to the indicators because they're going to be all over the place, because this kind of looks like this by nature. So your indicators are just going to be all over, just almost pretend this stuff isn't down here. and we don't actually technically need it. The only thing we really want to look at is the squeeze histogram and actual price action. So with the VIX futures here, I have this trend line here that I've been kind of sketching in poorly, but that's the magenta trend line there that's been containing lower highs, right? Well, you see how it tried to get over there, failed, it didn't have a close above it, it pulls back to the 21, and then it closes above. So even though the VIX is mean reverting, meaning it doesn't really trend well, it looks more like this over time, like Bart Simpson's hair. You see how it caught on the 21 as if it were a trending stock? That's really dangerous because that means that it's starting to behave like trend, which would imply higher highs and higher lows. So obviously your level of resistance is going to be all through here. So you'd look to target 34, 35 on the VIX futures. And this is just a wildly bearish look. You see how the squeeze histogram has got an upward bias here? Now, the fact that it's in a squeeze is irrelevant. It will be in a squeeze almost perpetually. But the squeeze histogram tells you the direction that it wants to go. So when that is positive, that's positive, this is positive, this is positive, buy signals here, this is positive, and it's acting like trend, closing above trend lines near major resistance. This is like wildly, wildly dangerous stuff. So if they don't intervene this weekend, which I don't expect they will this time, I did expect it last weekend, I don't expect it this weekend. If they don't intervene, then this sets up the stage for a potential limit down situation pretty soon. Also, one last thing here before we part ways is they're going to continue to intervene, right? If this is an analog to 2008, and it seems like 2008 is the best analog for this, if this is indeed an analog to 2008, you should expect continuous interventions by central banks around the world, but it's not going to be until the Fed panics that the market will stop panicking, and the Fed will be the last to panic. So we still have a lot of little blips, if you will, to get through before that can happen. So without intervention going into next week, guys, short everything. It becomes actually pretty simple. I wouldn't short energy, but I would short literally anything else, especially tech. And you can pay like special attention to like things like Shopify, still like the high beta tech stuff. So everything would be a short. There is one good long that I know off the top of my head, and that's LNG. So I like this one. I traded a little bit yesterday and today, and I still like this stock. It looks good. It's in energy, which is still a relatively decent part of the market, and it's kind of has its own story going. So I do like LNG here long, and I like everything else short, especially if they don't intervene. Then it would be a double short, and the target remains the same target that I've been giving you for a while now, which is 3,400 on the SPX. Full disclosure, I don't expect that 3,400 will hold over time, but it is where the market wants to go in the short term. So hopefully all of this was helpful, guys. Not a whole lot has changed from this weekend from the last video, the Friday video, from last week to this week. So you can actually kind of combine those. If you want more information, you can go back and watch that one and then kind of combine it from the information here. But again, I'll just say it one more time. This week is different because one, you've relieved your oversold conditions by bouncing, which is a bearish thing. Two, you've used up your intervention, right? That's a card you can play only 1 or 2 times, and they've already played it twice. So they've used up that intervention. And 3, now the VIX is getting involved alongside all of the other signals like the dollar and bonds and the yield curve. So everything is kind of screaming at us one thing, and that is stay short. Either ignore the bounces, just move out of the way if you see a bounce coming, and ignore it, and wait for the spot to short. Or if you play the bounces, I wouldn't take home any overnight risk, because the market direction and the Fed is clearly one-sided, and I think 3,400, we can see that quicker than we think. Alright guys, that's my time. So thanks for stopping by, checking us out. Be sure to leave us a like, leave us a dislike, whatever's in your heart. And leave us a comment or any questions you may have in the chat. And aside from that, guys, I hope you have a great rest of your Friday. Have a great weekend, and I'll catch you guys in the next video. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.